Hi, this is Rajat Bose here. This time we are coming up with our stock recommendations. Last week, because it was a truncated week for us, that's why we did not give stock recommendations, but this time we are giving stock recommendations, and there would be 3 stock reviews apart from a very thorough study of cnxmidcap, what's happening in midcap, as well as Nifty, Bank Nifty. Now we are coming up with the analysis of the indices. To start with, Nifty. Nifty this week has bounced back, although the bounce back is not with lot of gusto, but we need to see what are the key levels, what are the major resistances coming from key Fibonacci levels. We are going to discuss the Nifty using 2 charts. We are using the weekly chart. Weekly chart comes first, and then we will follow it up with the daily chart. Since we are giving a weekly review, that's why I've given primacy to the weekly chart. The weekly chart shows that Nifty for the last couple of weeks had been on a tear, and it has moved up and it has conquered this week the levels of 20,000, and it has closed above 20,000, comfortably closed above 20,000. Since it is already on closing price basis, it is nearly 1% up over 20,000. But the fact remains that the Nifty is very close to 2 key resistance levels. One, on the daily chart, the Fibonacci is at 2250, the level of which I have referred quite a few times. And then there is on the weekly chart, as you can see on the screen, there is 2390, 2.618. This is the Fibonacci that was created by the fall up to the March 2020 low. It is the February high, February 11 high of 2020 to about March 23. That 42 days of downswing, that is used to make the projection, and that projection shows that the 2.618 times comes to about 2390. So basically I am expecting the Nifty to post a top in between the 2 Fibonacci's, 2250 and 2400, and from there will start the correction. The deepest correction I am expecting in the mid caps, because I will elaborate that shortly. When I go there, you will see that mid cap has a much greater potential for a fall compared to Nifty or the Bank Nifty. Suffice it to say at the moment that Nifty is showing traction, and chances are that it would test 2250 to about 2400 kind of levels. It isn't as if that it cannot go beyond 2400. It can, but it won't sustain. And why I'm saying that this range will be the will actually see a top, 2.618 Fibonacci on the daily chart as well as on the weekly chart. These two are generally very powerful, and Nifty is most likely to at least pause and come down substantially, and then there could be another leg of upswing that can happen, or it could be a top for quite some time. So market is overheated, no doubt about that, but as of now the momentum is still there, but be watchful. So from the perspective of the weekly chart, what I could gather, I have told you. From the daily chart, what I see is that it's a very strong up move, because most of the candles are beyond the upper Bollinger Band. So that means that momentum is pretty high, and the 9-day exponential moving average is at 19,924. So unless that is breached on the downside decisively, or at least on heavy volumes, you don't see any kind of severe correction or something. But if it were to go to those levels of 250 to about 2400, I expect considerable selling to come in, and there is a possibility that if the 9-day exponential moving average gets broken at 19,925, then it might even test the 19,600, that is the 20-day moving average. But as of now, the momentum is very strong. So first let us see the upswing, and then there could be a corrective downswing. But remember one thing, since the two Fibonacci's are coinciding here within a span of say 150 points, the daily chart 2.618 and the weekly chart 2.618, so this could be a major top. Now we are going to deal with the Bank Nifty. We will use the weekly and the daily chart just as we did in the Nifty. Bank Nifty, I would say, over the past week, it has performed the best and it has got the best of momentum, bullish momentum. But we need to see whether it manages to take out the previous high at 46,369 and go further up, or it comes down just about testing that and falling again. Our second index is Bank Nifty as usual. Bank Nifty this time showed a good movement. This week had been the best movement for the Bank Nifty. It is showing considerable traction. Chances are that we would see Bank Nifty scaling up to 46,700 level. Around that level there is a Fibonacci resistance, as well as the previous high was around say 46,369. It has come close to that, but once 46,370 gets taken out, then you can expect 46,700. Whether it moves beyond that or not, it remains to be seen, but probably it will. However, at least selectively you can continue to buy or continue to hold on to your positions, but even in bank stocks expect some selling to happen, and a correction is lurking around the corner. The reason behind that is that the weekly weekly RSI shows a strong negative divergence. This kind of negative divergence in the weekly chart, ultimately the correction, a deeper correction, it is a harbinger of a deeper correction. So we ought to be careful. Let's look at the daily chart now. The daily chart shows that the last week's movement had been pretty good, and one significant thing that has happened is that on the daily chart we see that the 20-day moving average and the 50-day moving average has posted a golden cross. So this golden, what is the import of this golden cross? In this kind of golden cross, especially between 20 and 50-day moving average, the index or the stock comes down initially. This time it could well happen that it may come down even below the 9-day exponential moving average, which is located at 45,500. Even that may be breached, but it will bounce back for sure, because this kind of a golden cross where both the 20-day and the 50-day moving averages are upsloping and 20-day is breaching 50-day moving average from below, so you expect an upswing after an initial fall. So maybe that fall would come down to something like 45,500, and after that I expect that 46,369 would be conquered. That may get conquered even on Monday, but there would be a fall, and after that 46,700 is the minimum target that I'm looking at. Bank Nifty will post a new high just as the Nifty did or the CNX has done. So that's about Bank Nifty. Bank Nifty in this week, I would say The best performer is the bank nifty, and then the nifty, and finally the CNX shows some weakness. We have taken special care because lots of market experts, big fund managers, chief investment officers, they are raising concern. Even I had raised concern last episode. What's happening in the mid-cap? Mid-cap movement, mid-cap and small-cap stocks movement have been phenomenal. But what happens in such after such phenomenal run? Mid-cap index can fall a very big percentage point, by a very big percentage point. Watch the detailed study of cnxmidcap using monthly chart, the whole of the mid-cap index on the time series, weekly chart as well as the daily chart, and then decide what you are going to do about your mid-cap and small-cap holdings. When you are looking at the monthly chart, what you see here is that this index has the habit of moving up in that fashion. Prior to that, in the first week of August 2013, it began its upward journey from the lows of 6,330, and it posted a high, as I said, in the first week of January 2018 at 21,840 from a low of 6330 to 21,000. More than three times big jump. Then from there a 50% fall. Now look at the next upswing. Next upswing began from that COVID low of 10,750, and it posted a high before a correction that was first week of that was in the month of October 2021. That high was 33,243. Again, it's a three times jump from the 10,750 to 33,250. Almost exactly, it's from 100 to 300. Then in June 2022, roughly after spending 8 months of correction, it came down to test a low of 25,048, and now that upswing is still continuing, and we are knocking at the 42,000 kind of levels. Rise and fall are both magnified, and this rally began from, truly speaking, there was this 8-month correction that happened even in that earlier phase of 6,000 to about 21,000. So we take it that this rally actually began from 10,750 to currently 41,800. So it's roughly it's a 300% extra jump on the upswing. This suggests that a corrective swing is lurking round the corner, and the mid caps are going to fall. When they fall, we have seen that earlier in both the occasions it showed good amount of fall. It could be as high as 50%. It could be something like 25%, 25 to 50% fall can happen. So beware of that. Now let's look at the daily chart. Showed that on Tuesday there was a huge fall, and after that it is trying to move up, but this is a feeble move. But still, if the high posted on that day, that was around say 41,686, if that high gets taken out, then 43,000 is the target. But definitely continue to book profits, book profits around 43,000 because mid-cap index, once it starts its downhill journey, minimum probability is about 25% fall from the level it's touched, and it could even fall by 50% that we have seen. If history is anything to go by, you better be careful. This time we are coming up with stock reviews. Again, we have done PSU stock reviews. One of them you should book profits, and one of them you can still carry on. And the other one is a software stock. Watch the stock reviews. Our first stock is NTPC. NTPC has shown a phenomenal run from late June. Before that, it was languishing after the first bout of movement. Several months it consolidated, as you can see on the daily chart, that last year October through this year June, it continued to move within, say, 150 to about 170, 75, that kind of range. But come June, it has started moving up, and with corrections it was moving up. It was showing a lot of strength. Currently it has closed at 236, but after posting a new high for several years, it showed a high at 244.95. After that, the last 3 days there had been a correction. On the day it posted a high, that was Tuesday, that day itself it suffered a fall, and after that for the next 3 days it just traded below, within the 230s. Now it has closed at 236.70. My take is that NTPC, after several years, this bull run it is showing, chances are that so long as the 20-day moving average, which is currently at around 225, if it is not taken out decisively, when I say decisively, I mean at least a 5% fall from there, and not just that, at least it should stay below that level for one full week or so, then consider that NTPC is again in some bout of correction. Otherwise, there is every possibility of further upswing in NTPC. But those who have purchased it, say around 100 or lower, because it was languishing there for a very long time, if you have purchased at those levels, that is, say in 2021 or so, it would be worth your while to actually book some part profits. Why, I tell you, it did not stop at the 2.618 Fibonacci of the last downswing of the earlier corrective or earlier bearish phase, in which it spent several years there. From there this Fibonacci is created, and that 2.618 times of the last fall is at 209.45. It did not wait there. In fact, it actually posted a gap and started moving up. Even on the weekly chart, that's what we saw. So this level could be revisited. So initial weakness that may happen if it were to fall below 225, but if it sustains below 225, there is a possibility that it may test that Fibonacci level of 209. But NTPC can still move up. If there is a healthy correction, then it can move up further. But we can project a level of 261, that is the 3.618 Fibonacci level. Definitely book profit if it were to reach those levels. Our second review stock is a public sector bank, PNB. How does it look? It looks bullish. The weekly chart clearly shows that from the 2.618 Fibonacci of the last fall, at least on the daily chart, that was the last significant fall that happened in late from March to April. We have created a Fibonacci on that, and the 2.618 is at 65.70. It has been taken out. It has actually tested the next Fibonacci at 3.618 at 74. So PNB definitely looks good, and it could even move up to something like 78.85. that is the last Fibonacci level. 79, we have to create another bigger Fibonacci to see how it can go, but suffice it to say that you should remain invested in PNB because it has shown a strong up move on the weekly chart. The weekly candle suggests that it has moved up in the last week on high volume activity. That is, this week it saw 59.9 crore 60 lakh volume. That is quite a big volume. Normally the volumes are much less, something like it shows only about 275, that is 27 crore 50 lakh volume. That is kind of an average. So PNB looks pretty interesting. Let's review the daily chart. The daily chart shows the daily chart of PNB shows a doji pattern on last Friday, and the top was also made around that time. The top was 74.85 and the close happened at 74.15 and the opening price is 74. So when the open and the close are very close, very near to each other, we call it doji. So this suggests some kind of a pause or an indecision by the bulls, because on Wednesday there was a huge run in PNB from a low of 66.30. It went up to 73.10 that day. So that was a nearly 7-point upswing, which is roughly about 10%. After that, this is actually taking small steps on the upward journey, but there could be some bit of selling that may happen early part of last week. There could be a small bit of correction that can happen. It's only a course correction. Maybe from 74, 75 it may come down to 72, that kind of level. After that it is likely to move further up, and it can just go up to something like 80, 81 or even higher from there. PNB is definitely quite strong, so I expect even if there were to be some selling, there could be fresh buying if it were to come to levels between 72 and 70. Our third review stock is Affle India. It's a software company. It has posted a bottom on 27th of April. 27th of April it showed a low of 877.60. From there the recovery started, but it saw another dip, and this time there was a higher bottom on 17th of May at 922. After that, after posting this bottom of 922, which is a higher bottom in less than a month's time, Affle went on to move up, and it did move up pretty strongly. While the first phase of the upswing, or the initial upswing taking it to higher levels, last two trading sessions, as you can see on the chart, on the daily chart, especially in the month of June, 20th June Tuesday and 21st June Wednesday, Affle moved from a low of 1017 to a high of 1139 in two trading sessions. After that, it has become range bound. It has become range bound. It came down on a correction to a level of 1026. Again, it showed a higher top, this time at 1165. Another correction took it to test the 50-day moving average, this time on 14th of August at a price of 1056. Mind you, it posted higher low. And then again a sideways movement. Finally, in the recent past, there is another peak at 1178. This time, each time right from the month of June to September, it has actually shown higher tops, higher bottoms, and the formation on the daily chart clearly suggests that there is a likelihood of an upswing. The likelihood of the upswing continuing, provided the market supports it. But now that it is firmly above the 200-day moving averages as well as the 20-day and the 50-day moving averages, it is not falling below them, then we can expect that it can go up. The Fibonacci levels are given on the daily chart. The 1.618 times of the last major upswing, it now is located around 1259. So let's assume that could be the target for this. Now, once we look at the weekly chart of Affle India, you see this week it has actually fallen from higher levels. In the sense that it went up to 1178, posted a low of 1083, and finally at 1109 it has closed, but it is actually moving up, and the upsloping 9-week moving average as well as the 50-week moving averages they are supporting it. The 20-week moving average has also changed course. So Affle is going to go up. If at all you take any position, unless it falls below 1000, it is unlikely to become negative or bearish again. Now we have come to our stock recommendation section. Here we have covered two auto stocks. Auto, this week, the foregoing week that ended on 15th of September, the Ides of September may be bad for others and good for some others, but auto in general has performed better. So we have chosen one two-wheeler stock and one four-wheeler stock. I'm told that this is the most interesting part of the program, part of the video. So first stock, Eicher Motors. Eicher Motors closed at 34.27 on last Friday, that was 15th of September. The Ides of September saw that Eicher Motor in two successive sessions has crossed the 9-day exponential moving average, also the 20-day moving average, and now hitting the Bollinger Band high. The Bollinger Band high on last Friday was at 34.38 and it has closed at 34.27. We expect the stock to actually move up strongly from here. Initial target, of course, is initial target for Eicher Motor is 35.15, and after that there would be some resistance between 35.15 and 35.50, but eventually it is expected to overcome that, and it is likely to test its earlier high around 36.26. So suffice it to say that as of now we take it that you buy Eicher Motor with a stop loss below the 33.40 levels, 33.40 on closing price basis. It would have been better for some long-term holders to actually put the stop loss below 3300. In that case, I would say that not just 35.15 and 36.26, it can move up even further. My expectation is that if the market were to remain bullish, then Eicher Motors could actually move up to something like 37.67 and 38.35 going forward. These levels are Fibonacci levels, so that is how we have projected this target. Now we are going to discuss our second recommendation stock, that is Tata Motors. When you look at the Tata Motors chart, you find that minor saucer pattern is in the making. Tata Motors from April, it went up pretty steadily, never breaking the 20-day moving average, and finally around late July it posted a high of about 663. After that there had been a correction in the month of August, and in September it has started moving up again, and now once again the same old thing is in operation. That is, Tata Motors is being supported by the 9-day exponential moving average. Currently that 9-day exponential moving average is at 623 and the current price is 634. Tata Motors looks pretty strong. Even when you look at the 14 RSI at the bottom, you see that the saucer pattern is kind of developing there as well. Of course, it's an irregular saucer, not exactly a bowl-like formation, but the price chart is more like the inverted saucer pattern. Sorry, the regular saucer pattern, which is going up. An immediate target would be the July high of 663, but I tend to think that Tata Motors can actually move further up, and it can move further up to about 693. There would be a strong resistance at that level at 663, 693. Thank you for being with me. I hope you would have enjoyed the last half an hour or so. Lots of discussions, lots of insights. Please comment in YouTube, watch anywhere else, but please give us suggestions, give comments, give suggestions what we should do.